Hey everyone, welcome back to Corporate Decoder. Today QLEP-U just filed an 8K announcing the separate trading of their units, and I am seeing one key detail that tells a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about the transition from units to separate stocks and warrants, and it gives us a peek at how this SPAC is preparing to go it alone. So what is the big news here? Quantum Leap Acquisition Corp, or QLEPU as you might know it, has announced that their units will soon be splitting apart. This is a pretty standard move for special purpose acquisition companies, or SPACs as they're called, after they've finished their initial public offering. Think of it like getting a gift box where you can finally open it up and use the items inside separately. This company went public not too long ago, on May 4th, 2026, with an IPO of 20 million units. Each unit was a bundle containing one ordinary share and one redeemable warrant. Now, they're getting ready to let those shares and warrants trade independently on the New York Stock Exchange. The Class A ordinary shares will trade under the ticker QLEP, and the warrants will be available under QLEP-WS. This split is expected to happen around the 23rd of June 2026. Until then, the units will continue trading under the ticker QLEPU. After the split, the units themselves will no longer be available for trading. Now, what is really interesting here is not just the mechanics of the split, but what it implies for SPACs. The period after the IPO and before they announce a merger is a critical time. This separation of units is a step towards that. It creates more flexibility for investors and potentially more liquidity for the underlying securities. The warrants in particular give holders an option to buy more shares, which can be a way to profit if the company's value grows. This filing itself doesn't contain super detailed financial tables like a quarterly report, but it does signal progression in the SPAC's lifecycle. It's a procedural step that clears the way for the more significant events that SPACs are known for, namely finding and merging with a private company. The report states that the company consummated its IPO of 20 million units. Each unit comes with one Class A ordinary share and one redeemable warrant. This is the foundation upon which the company is built. The fact that these are redeemable warrants means that the holders have the right, but not the obligation, to buy shares at a certain price. This is a common feature in SPACs. The press release attached as an exhibit is the main announcement here. It is essentially informing the market about the upcoming change in how the company's securities will be traded. This is important for investors who own units, as they will soon need to be aware of the separate tickers for shares and warrants. Looking at the broader context, Quantum Leap Acquisition Corp is an emerging growth company. This means they are eligible for certain regulatory accommodations, like extended transition periods for new accounting standards. This is a common status for many newer companies going public. What is the story here then? It is a SPAC moving through its paces. They've completed their IPO, and now they're setting the stage for their core mission, identifying a target company and completing a merger. This separate trading of units is a key milestone in that journey. It unlocks different investment strategies for traders and investors. Some might want to hold the shares for long-term growth, while others might speculate on the warrants, betting on a significant increase in the share price. What are the risks? SPACs are inherently speculative. The success of Quantum Leap Acquisition Corp, like any SPAC, hinges on its ability to find a valuable private company to merge with, and then for that combined entity to perform well in the public market. Historically, many SPACs have struggled post-merger, often seeing their stock prices decline significantly. For example, many microcap SPACs that have gone public in recent years have experienced substantial drops in value post. Merger sometimes losing 70 to 90% of their value within a year of the merger. This current filing is just a step towards that eventual merger, but it is a necessary one. The opportunity, if they can find a solid company and execute the merger successfully, shareholders could see significant returns. The warrants, if the company performs well and the stock price rises above the exercise price, can offer leveraged upside. So my take on this filing is that it is a normal, albeit important, procedural step for Quantum Leap Acquisition Corp. It signals that they are moving forward with their plan to become a fully fledged operating company, or at least ready to be traded as such. The real story will unfold when they announce a merger target. Until then, this is just a sign that the clock is ticking on their allotted time to do so. The risk I am watching is the company's ability to identify and successfully merge with a quality target within their mandated time frame. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like this video and subscribe for more. Check out the Discord link in the description.